Hello everyone, Charles Moon here with TradingAdvantage.com, representing the CME Group, bringing you your daily market commentary. Market conditions have been crazy. It's really been benefiting more of the short-term traders as opposed to the long-term investors. We've seen an absolute squeeze to the downside, and the momentum has completely shifted. These momentum stocks that have been racing higher over the last year, 18 months, have really gotten hit in the short term. Amazon down 19%. Look at biotech. Gilead's down 21% here in the short term. And again, they've really flashed down. Now, there's been some short-term support coming into play in the SPX and the SPY, which is the 50-day moving average. Corresponds at around 1800 to 1801 in the SPX, which is the S&P 500, and the SPY, which is the ETF for the S&P 500, has been at around 180. So look for that key technical level to hold. If it happens to actually break through and close below this technical level and that immediate resistance is found, we can see a very fast flash to the downside, upwards of around 10%. Now, I don't suspect that's going to be happening here. I do believe that if it does break lower, it will be around 5% as opposed to 10. But the outcome, as far as a possibility goes, 10% is absolutely in play. These momentum stocks, though, are something to watch here, because if the market starts rebounding, they're going to really start catching a little bit of fire, and both short-term and long-term investors are going to be jumping in looking for value plays. So you have to watch and make sure that an absolute bottom isn't in play. Now, you know, whatever key support levels have been there, they've held for just a momentary pause, and then it'll slam through. And once it slams through, a lot of velocity and volume comes in. Really, all eyes are going to be focused this afternoon here on the FOMC minutes release. Now, in January and December, there's a bit of an adverse reaction. It's been muted as of late, but we have to see and be very attentive to see how the market reacts to this information that's being released. Depending on what Janet Yellen says, it could come off as dovish as far as the committee goes, or it could come off as hawkish, and the market could react violently from this news, especially based on the market conditions that's been presented here as of late. So, will we see an absolute rebound? If the rebound does come in play, we could see a straight shot to the upside. The Dow could possibly gain around 200 points. But if it's an inverse play where the market starts going down, you have to see the test in the S&P 500 at that 50-day moving average. And if that level fails to hold and we close below and we find that resistance, the momentum is going to be to the downside in the short term. Now, we are in earnings season. Alcoa had reported yesterday, did slightly better than expected, even though revenue was down. They're up pre-market right now. Earnings could really propel the stock here. Again, since we have been suppressed off the highs here, there's been a short-term liquidation. But on the flip side, you have to understand that if stocks miss on their EPS reports or their revenue or their guidance, they will be punished, and they will be punished severely. Right now, we're seeing an absolute rotation through stocks. There's going to be a lot of fire sales and liquidations. Buy stops are getting blown out here. You have to be careful to the downside on a lot of stocks. So if you're in it for the short term, that's absolutely great. These are the perfect market conditions for you. Long-term investors is very difficult. You know, it's about time that you look to diversify both short and long-term, because trying to invest long-term, while there is a little bit of room to the upside now after this recent downslide, there really isn't much for growth for over a sustained amount of time, especially if the market starts correcting itself and really pressing lower. We are at all-time highs. Don't forget, folks, we're not that far from these levels. Stocks are reflecting the same thing. We're at all-time or 5 or 10 or 20-year highs in a lot of stocks. So you have to be cautious about holding stocks long-term due to the fact that we could see this correction in play. A lot of it's going to be determined on this FOMC minutes here, what the Fed's going to be doing moving forward, possible geopolitical situations. The Ukraine situation is still hanging over our heads, and you have to be careful of the correction. This has been a long time coming. This has been speculated. I'm not saying it's going to happen. I speculated towards mid-2014, end of 2014, early 2015, where the correction could start coming into play. But who really knows? We're not here to predict the future. I look at the market direction and I play in accordance. This is Charles Moon with your daily market commentary. Have yourself a wonderful day.